But sometimes I even see this value that Shell sees in Nigeria as a bit questionable. Because if Shell, as the biggest shareholder of Bonga since 2005 in the Niger Delta, still sees value or reasons why to keep holding the company or their share in Bonga, and the Niger Delta still looks like that, what is the stake? What is at stake here? Total Energy just announced that it has sold its share in Bonga Energy Field, which is a Nigeria oil exploration company. It has sold its shares, 10% stake in Bonga Energy Field, to Shell. What does this mean for the entire energy sector? And what does it mean for you as an anticipating investor or an existing investor that your portfolio is largely concentrated in the energy sector? To most people, this will sound like another oil company reshuffling its assets into other sectors. You see, but when I investigated into this as an investment portfolio manager, I found out that it is a signal and it speaks volumes. So in this video, I want to share with you the positives and the negatives, how it is good for the country, how it is good for Shell, how it is good for Total Energy. Don't go anywhere. So before we unpack what this really means, we want you to know that over 72% of you who visit this channel regularly and watch our content do not subscribe. So if you enjoy anything that we share on this channel, the content that we share with you, if you enjoy them, go ahead, do us a favor and subscribe to the channel. This goes a long way for the channel, the exposure, and it gives us a sense of encouragement so that we can continue doing our research to bring the best of investment solution and fundamental analysis to you. This makes sense, right? Thank you. So first, we should know what Bonga Field is. You see, the Bonga Field is a deep offshore oil asset located in the Niger Delta, which is the southern part of Nigeria. It started production in 2005 and it was Nigeria's first deepwater development. It is largely operated by Shell Nigeria Exploration and Production Company. The Bonga Field has 4 major pre-deal equity structures, where Shell has 55% of Bonga Field, ExxonMobil has 20% of Bonga Field, Total Energies has 10% of Bonga Field, and Eni has 5% of Bonga Field. This field, as we speak, is a mature asset, which means it has peaked in production and it's in its mid-late life cycle. So when Total Energies decides to leave this Bonga Field, it is not a random decision. Yes, I think it is precise and it's fundamental. Which brings us to the second question. Why did Total sell? So after enough research, I have found 3 main reasons from a fundamental standpoint why Total would be inclined to sell their share. First is portfolio optimization. If you have noticed, Total Energies is in a global strategy shift, which means they are focusing on higher returns, lower carbon assets. You know how it has been publicized by big media, right? That every company is tilting drastically towards reducing their carbon footprint. So the same thing, I see that this Total Energies strategy or decision to exit Bonga Field is also a great decision in the area of if they are doing their best to drastically reduce their carbon footprint as they accept the new world order. See, and such decision should also open your eyes to the obviousness that climate change is not a husk. You see, it's a fact. So companies like this that are moving from fossil fuel, which is energies that destroy the environment, to more sustainable energy, or I see the decision that Total Energy is selling their share of Bonga Field as a decision that is largely focused on change that is largely focused on sustainable and renewable energy. Although sometimes society manufactures what change is. Yes, change in society is completely different from change in reality. What this means is that they are moving from older oil fields or practices that are detrimental to the environment to practice or decisions or investments like LNG, renewable energy, deepwater projects with, great economics. And the second reason is capital discipline. You see, selling a non-core minority stake actually allows Total to free up capital. That capital cannot be deployed into projects with internal rates of return. Projects like upstream gas, you can read about that, solar in Africa, and energy transition investments. The third reason why they would have done this is operational alignment. I bet most of you in the Niger Delta don't know this. Shell is the operator of Bonga. Yes, they have over 55% stake at the facility or the venture, which means they have the highest operational authority. So buying Total's 10% stake gives them more operating control, which equals streamlining decision-making and potentially improving efficiency. So looking at this from an investment standpoint, I see that Total is de-risking while Shell is doubling down where it already has scale or majority of authority. Which brings us to the third question. The question is, what does this mean for Nigeria? This raises a few key points about the country's oil sector. You already know that the Nigeria oil sector is a dog-eat-dog sector. Yes, nobody is playing with anybody, so long as you have a hold of it, just even as little as a portion of it, you don't want to let it go. The first point is this, that mature assets are flipping hands. Assets that are largely held by the 1% of the 1% are now changing hands. So to say the least in this area, major companies like ExxonMobil, Total Energies are gradually exiting mature or high-risk Nigeria assets. I say this because post-pandemic, the few years post-pandemic, which is about 4 years now, you notice that Total have changed to Total Energies, and then even their branding have changed just to support or to put them on the streamline of they supporting the global movement, the New World Order. Also, even NNPC changed their branding. And lately, just recently when I traveled to Lagos, I noticed that even ExxonMobil sold to Seplat. So the headquarters of ExxonMobil in Lagos right now have changed their identity to Seplat. These are great movements that if you are an investor or an early investor or an existing investor, you should know exactly how you should start reshuffling your portfolio. So these companies are replacing assets that does not support climate change or that are less supportive of climate change with other assets with lower carbon or higher profit margin. Another thing that this decision means for Nigeria is that Shell still sees value in Nigeria. But sometimes I even see this value that Shell sees in Nigeria as a bit questionable. Because if Shell, as the biggest shareholder of Bonga since 2005, still sees value or reasons why to keep holding the company or their share in Bonga, and the Niger Delta still looks like that, what is the stake? What is at stake here? That is why I say it is a bit questionable. Because despite regulatory, security and legal risks, Shell buying more of Bonga signals that they still see value in offshore Nigerian oil production. Pretty petty, especially as they clean up their onshore portfolio. You have to do a bit of investigation by yourself. So another thing is we should expect more deals. Or I think majorly from my own observation that this is part of a trend. We will likely see more divestment, we will likely see more joint venture realignment, and this particular move can open up opportunities for local players and private equity-backed buyers with higher risk tolerance. At this point, you have been able to know exactly what the Bonga Field Oil Exploration Company is, which is located in the Niger Delta. Also, you have been able to understand the reasons why Total Energies sold their stake in order to move into more renewable energies. Also, what is good about this particular diversification strategy that Total have done for Shell as a whole, which is for them to be able to have a higher stake, a higher authority, capacity in the entire sector. Formerly they had a 55% stake. Now adding 10% to it, they have over 65% stake in the company, which gives them more power to make better decisions for the growth of the company. So here is a few takeaways for my investors. Whether you're anticipating or you're already an investor, here is a few takeaways. So as an investment manager, this is how I have interpreted this. That first, energy portfolios needs rebalancing. What does this mean? This means global measures are restructuring. Investors should be tracking how they are moving capital between oil, gas, and renewables, because this shift obviously tells us where the smart money is moving to. Another thing is the country's risk premium is still high, because even with reforms like the Petroleum Industry Act, Nigeria still presents challenges. Don't be looking at me as if you don't know what the challenges are. Regulatory challenge, oil theft, security problems. So what I believe, or what I've come to understand with this entire thing, which I think is a very strategic exit, is that Total is not convinced that the risk-adjusted returns weren't compelling enough anymore. Because if you go back to the first reason, the first law of why people do business is to make profit. So if you are constantly faced with regulatory delays, oil theft and security threats, I don't think you would like to continue doing business in such an environment. You see, so I see this as a major reason why they have decided to exit the market. Another key takeaway is that Shell's bet could mean upside for the market. A lot of African countries have been adopting EVs, electric vehicles. So as the areas where we cannot use fossil fuel are shrinking, also you should be smart do your own investigation. For those who are already largely invested in Shell, you should see this particular news or this information as a bullish signal, because the decision for Shell to increase their stake in Bonga, it means they see operational or production upside or a better future oil price. But also, as you want to increase your stake, if the decision is also backed by the government, is it a strategy for the government to also impoverish and keep the citizens under a bushel while people are moving into renewable energy? These are things that you should consider by yourself. Another key takeaway is that energy transition is real. Whew. Yes, I say this because if you are research-oriented and you have been listening or watching the news, you would find out a few months ago that Aso Rock or the president allocated, or there have been a recent budget that billions and billions and billions of naira have been allocated to building a structure that would power the entire Aso Villa with solar. So let us talk about what is real in this decision of Total moving from fossil to renewable energy. Yes, we know for sure that Total's decision is aligned with a greater trend, which is a bigger movement. You see, because for an oil major company to be reallocating capital, I do not think it's just because of profit. It can be traced basically to ESG, or long-term survival, which is environmental, social, and governance, the entire bubble of that. See, so this is a key takeaway for institutional investors who are managing climate-oriented portfolios. My final word to you would be this, that this deal that I have explained or expressed in a few minutes is not just about movement of stake or power or exchange of money from one particular choice of investment to a different choice of investment. This deal reflects the fundamental restructuring that is happening in the global energy market. You can either see it for yourself, as I've explained it, or you can do also other research. But for Nigeria, it's a warning and an opportunity. Well, for Shell, I think it's more like a strategic bet. The reason being that over the years, government policies have highly favored, that sector. So they can continue to hope, and I believe they have their hands quite in high places for them to be making such a bet in such a time that things are really moving in the direction that Total is moving. While for Total, I think, or observably, it is a strategic or a disciplined exit. So as an investor or analyst, my duty is to track where the big money is flowing and bring the information to the community so that you can get it firsthand and be able to have just good enough information to make a well-disciplined, a well-informed investment decision. Because in the investment space, who exits and who doubles down always tells a story about what is next. So don't let this pass you by without you keying into the fundamental information that are in this video. And also, never take any of the information that we share with you fundamentally as an investment advice. We always call your attention to doing your own research. If you need assistance with what to do, always leave a comment and we will do our best to respond to you. So we have said earlier that over 72% of you who come to the page to seek advice and also follow up with what we are sharing with you don't subscribe. So like we have said earlier, when you subscribe, when you share, when you leave a comment, when you like the content, this goes a long way for the page. It gives us a sense of encouragement for us to continue doing what we are doing. That means that the information that we are sharing with you are also assisting you in a way to make good investment decision. Thank you very much, and I'll see you in my next video.